Welcome back to the newest episode of the Orange Wheel podcast. My name is Ted. I'm the co-founder and CEO of Orange Wheel. And this is the podcast where we understand the monetary transition and business models emerging in the Bitcoin space. I'm joined today by Sanjay. He is the founder of Sovana, and they're building some really cool stuff in the intersection of Bitcoin and real estate. Really excited to kind of dive into the business model that they're unlocking there today. But before that, Sanjay, it'd be great to hear how you're doing today and get a bit of a background in terms of how you first came to Bitcoin.
Yeah, absolutely. So my name is Sanjay. My background and training, both in computer science. I spent almost 2 decades at Google. Started there when the company was just over 1,000 people and stayed until it was, I think, around 180,000 when I left. So yeah, very fortunate to be part of that quite extraordinary journey. About halfway through my tenure at Google, I discovered Bitcoin. So this is now in 2012. I still remember it was on an email investing list that one of my buddies had created. And another one of my buddies sent an email saying, if you haven't yet started paying attention to Bitcoin, now is the time. And this is someone that I trusted a lot. And so I took a look at his description of Bitcoin. He listed the properties of Bitcoin. He said, these are the properties that Bitcoin is trying to hold. And I remember thinking to myself, if those properties endure, if they survive, this is going to be the base layer of the global financial system. Mm-hmm. Mm-hmm. Unlike a lot of Bitcoiners, I think the more typical story is, I saw Bitcoin, I thought it was a scam, I dismissed it, it looked like a Ponzi, and only years later did I circle back to it and wish I'd taken a look at it closer the first time. So that wasn't my story. I was a gold bug at the time. I owned physical gold, probably more than you could carry in both your hands. Actual gold, not the ETF, not miners, but the actual physical asset. And I'm from India, originally from India. And so in India, it's sort of culturally embedded in our DNA to value hard assets, to value something that, is out of the dirty hands of the government, can't be debased. We love real estate too. We love real estate. Of course, you can't put real estate in your pocket. And so, they actually say that Indian households are one of the largest holders of physical gold in the world. More than the top few central banks combined. So serious holders of gold. And it makes sense. For my entire adult lifetime, we've experienced 10+% debasement. And that's against the dollar. That's not against a basket of goods. That's against the dollar, right? Another inflating currency. And so we may not be able to articulate exactly why we love gold, but viscerally we feel that no one's making more of this, right? And so when I first came across Bitcoin, it just immediately clicked for me. I was sort of on the digital gold bandwagon before it was cool. And since then, since 2012, where I am a very typical pleb, the Bitcoiner, is that it just became a passion of mine. And in particular, getting people into Bitcoin became a passion of mine. If Bitcoin is the life raft that we all believe it is, then more than anything, we ought to want people to own some of it, right?
Certainly.
Once you own Bitcoin, you want to borrow against it. You want to try to get a house. Those things are all great. You want to buy coffee with it. You want to transact. Like, those things are all great too. But my passion lies in bringing people who don't have any Bitcoin into it. And so that's really the genesis of Sovana. That's the inspiration of Sovana.
Amazing. Yeah, I'd like to dive deeper into Sovana momentarily. That's a great, very fascinating background and Bitcoin journey story. I think getting in 2012. It's great that you heeded your friend's words and took the time to actually understand it. I think I also very much try to, when I communicate to people, try to communicate the properties of Bitcoin, right? And there can be debates about whether or not they will, as you say, endure through time. Can they maintain these properties? Do they really have these properties? But I think that if you look at it as a technology for being a money, and you go on a property by property basis against the alternatives, it does have the superior properties. And I believe, ultimately the superior technology will win through time. Very, very cool. And I think also having a passion for bringing people on. I think many of us plebs suffer from that challenge of being the person that's always talking about Bitcoin, and nobody wants to. I guess the challenge I face personally is, you can take a horse to water, but you can't make it drink, so to speak, right? No matter how many times you try to kind of convey the message in different ways, it can. I think everybody has to kind of come to it in their own time, is what I've sort of come to. But maybe on that point, like, what strategies do you tend to use? What tends to work well when you bring people into Bitcoin for the first time?
Yeah, that's a fantastic question, and it's one that I think about a lot and have sort of iterated on a lot, because I have 3 kids and I want them to also understand what Bitcoin is and why it's so special. I feel like also, by the way, I completely agree with you that it's all about the properties. There's a chart in the book, The Bullish Case for Bitcoin, that my good friend VJ wrote. And that chart to me is the case for why Bitcoin is going to become the global store of value one day. And what I love about the properties is that they're so easy to arrive at intuitively. So I've got 3 kids. The oldest ones were born in the same year as Bitcoin, 2009. So they've sort of grown up with Bitcoin in a way, right? And to them, I always say, hey, look, first of all, I established that humanity has a need to store value into the future, right? Sometimes we overproduce relative to our consumption, and sometimes we overconsume relative to how much we produce, right? That's called vacation. And so everyone has, or a rainy day, everyone has, across the world, across time, has a need to store value. Super intuitive, right? Okay, great, fantastic. We all need to store value. What are the sorts of things that we would like to store our value in? If we're squirreling something away, what do we want that thing to be? Would we want to store our value in bananas? Right? Obviously not, because a month later they're rotten. Would we want to store value in something that you can't take with you on vacation so that you can spend it later, right? Would you want to store value in something that you can't break a piece off of if you want to buy something small, right? Or you can't break a piece off of it because if you do, it decreases the value of the thing, like diamonds, right? 2 small diamonds are worth less than half of the larger diamond. And so divisibility, you can come to. And of course, I mean, there's many others. You don't want to store your value in something that you can't verify when someone's handing it to you, right? If you're trading. But the most important one, I would say, is scarcity, or having a finite supply. You don't want to work hard for something that someone else can just snap their fingers or push a button and produce more of.
Yes.
Right? It's super intuitive. And so all the properties of a good store of value, literally like a 9-year-old could arrive at, right? And so, yeah, that's where I like to start when talking about Bitcoin. Different things resonate with different people. This idea of you're working really hard for these things called dollars, but someone else can print them and give them to their friends. They're not going to give them to you, but they can print them and give them to whomever they want. Resonates with a lot of people.
It's great. Yeah, I think it's great to break it down in very simple terms like that. And I think in today's, like where we are today, I think it's becoming more and more self-evident for the average person. Gold bugs have been saying this all along. People who study monetary history, people maybe more seeped in this, have been talking about it for a long time. But I think year over year, the discussion around inflation, currency debasement is entering the mainstream more and more. So I think it's becoming kind of undeniable about that scarcity property and why we need something better. Very, very cool.
Just one last thing on that, Ted.
Yes.
A very important property of a store of value, and this is the property that Bitcoin lacks. This is the reason why Bitcoin is not a store of value. Maybe that take you by surprise a little bit, right? It is not a store of value today. It is simply not storing value, Ted. It lost half its value since November, October, November, whenever that was, right? And so if something is worth half against a basket of goods compared to a few months ago, that is by definition not storing value. And I think this is what a lot of folks who even love Bitcoin either get wrong or don't articulate in quite the right way.
Mm.
Bitcoin is becoming a store of value. It's on a multi-year, probably multi-decade journey of becoming a store of value. The property that Bitcoin lacks is established history. And with that, widespread understanding and acceptance of its properties and of it as a store of value. Gold has 5,000 years of history to prove itself, right? And therefore, widespread acceptance that it is a store of value. There is also some level of understanding. Not everyone will be able to articulate why gold has value, but at least enough people accept it as a store of value. Bitcoin doesn't have that yet. And that is what hyper-Bitcoinization is. That is what monetization of the asset is. Mm-hmm. It's the journey from becoming this thing that nobody really knew what it was back in 2009, 2010 to becoming one day a stable store of value. And that's the investment opportunity, right? Therein lies the investment opportunity today. And you and I happen to be alive during that transition from gold to Bitcoin. But one day, Bitcoin is not going to be a phenomenal investment opportunity. It'll be a store of value.
It's just going to be a savings account. It's going to be like a savings account, right? And you keep up with it. Yeah. Technologically.
Exactly. Nominally, the price will keep up with debasement. And in real terms, it'll keep up with, or it'll grow with actual productivity increases.
Yes, technological enhancements in productivity. 100%.
Exactly.
Yes. No, I think that's a very exciting part. And I think it's important that, I think the way you've articulated is, I think, a minority within, certainly in the Bitcoin space. I think people, very much agree with you that are overly optimistic about what it is today versus what it is becoming. And this kind of discussion about becoming is really the story at play here. And it also leads to a lot of miscommunications around, correlations. Why is it correlating with this over this?
Exactly. Why is it not going up when there's a war? Why is gold going up? Yeah.
Exactly. And then, as you said, this is the investment opportunity. This is the really exciting thing. It's a once in a species opportunity, as some say, when we, as you said, move to a new monetary system, and it creates a really exciting investment thesis behind it, right? So I think with that, maybe that's a good segue into what it is that Sovana, your new company, provides. What was, I guess, the genesis of the company? You hinted at it earlier, but what was the problem you believed was occurring in this kind of adoption space, and how did you what's the value proposition you put together that helps address it through Sovana?
Absolutely, yeah. So a few things. One, as I mentioned earlier, I really want people to make an allocation to Bitcoin. It is protection against what's coming, and the most important thing is that you own some and that you understand it sufficiently so you don't panic sell either when it goes through the roof and you think you're rich, or when it collapses, as it inevitably will the moment you buy it, right? That's the story of Bitcoin. The moment you buy it, it collapses. So that's one. I want people to own it.
And just may I just interject a little bit? How important is it for you that it's actual Bitcoin versus a indirect exposure?
I think there's no wrong way to own Bitcoin. I think it ought to be the right mix depending on how much probability you assign to different risk vectors and threat vectors. Mm-hmm, mm-hmm. You want some amount of your Bitcoin completely self-sovereign, right? That's for the scenario where you have to flee, where the government might, 6102 Bitcoin, but you may want some diversity in custody, right? So you may want some of the ETF, right? There are benefits in keeping some Bitcoin as an ETF if you want to leverage it. We have to be very careful. These are very dangerous terms, but if you want to responsibly leverage your Bitcoin, then having it in the TradFi system, just to some extent. So I don't think there's necessarily right and wrong. Mm-hmm. How many people have lost Bitcoin in self-custody except for the Bitcoin that they had on an exchange,
Mm-hmm.
right? They're like, oh wait, I had some on Coinbase.
Mm.
And so even though I lost all the Bitcoin that I was trying to self-custody, because I had some elaborate, foolproof, bulletproof way of custodying my Bitcoin until it outsmarted me,
Mm.
or your Bitcoin gets stolen, except for the Bitcoins that you had. And Sovana, we're actually starting with the ETF.
Mm. Okay.
Let me get back to the inspiration for Sovana. So yeah, I want people to own Bitcoin. I also want for Bitcoin to be held by many people. So it's like good for people to own Bitcoin, but it's also good for Bitcoin to
Yes.
be widely held
Yes.
by as many people as possible.
Mm-hmm.
And I think that's a key part of that journey of monetization. And so um, I like real estate. The reason I chose real estate is because it's an asset that for a lot of property owners constitutes a good chunk of their net worth.
Certainly. Yep.
Solvana is for folks who want to make a serious allocation to Bitcoin, a serious long-term allocation to Bitcoin, not a few hundred, few $1,000s, but 1, 5, 10, 20% of your net worth to Bitcoin.
Mm-hmm.
Real estate's where the wealth is at. Kind of like why that dude robs banks. That is a sort of very ripe source of wealth for a lot of people. For a lot of people, it's not really doing anything. It's sitting there untapped, and we'll go into why it's hard to tap equity. And then another thing is sort of this my underlying belief that Bitcoin has to first mature, maybe not first, but it has to mature sufficiently as a store of value before it can transition to medium of exchange.
I agree with
It
you.
doesn't have to fully transition to store of value. That transition doesn't have to be 100% complete. You can sort of have it pipelined, but it does need to advance sufficiently as a store of value for the simple reason that I'm not going to spend my Bitcoin if I think it's going to appreciate in value, right?
And
Now,
especially not if it's a taxable event as well, right? If you're getting taxed on
exactly.
the transaction, I mean, yeah.
Exactly. I think that's added sand in the engine. Also, payments are so easy. I can literally pay with my watch. Now, in some parts of the world, payments are not easy. And so that may be different, right? But I mean, I was in India in January and I was surprised at how easy payments are even there. Like the coconut vendor on the side of the street had his QR code that you can use the Indian system of payment for. So yeah, I'm talking about like if payments aren't a pain point, then I don't see folks jumping at the opportunity to pay in Bitcoin. That's actually where the name Sovana comes from. SOV comes from store of value.
Very cool.
Yeah. As well as, and then I would say sort of the last thing is in 2022, this is when Bitcoin was on its way down from 70, which was the previous high, 69 or 70. It was on its way down, ultimately would end at 16 or so. And I remember about halfway, a bit more than halfway down that journey, this is around 2022, I remember going, I have to buy more Bitcoin. But I didn't have any money to buy more Bitcoin. And so what I did have was a property just outside of Seattle. And it was a rental. And I got a cash out refinance, interest only loan, and bought Bitcoin with it, only to see my investment get cut in half. And so, I realized a couple of things. A, it's not easy to tap into your property's equity because it requires a monthly payment, and a lot of people can't afford a monthly payment. And B, it's very stressful to tap into your home equity to buy Bitcoin because it can get cut in half. So, an inspiration for Sovana was like, how could my experience there have been better? How can we reduce the stress and reduce or eliminate the monthly payment?
Okay, very interesting. No, it's great to have that kind of firsthand experience as well to kind of then build upon.
I'm still paying that interest-only loan, by the way. I'm up on it now, but it was quite the treacherous ride.
Yeah, I guess 2022 must have been 23 as well, a rough year, right? That's especially with the family, right? If your significant other is also kind of Having to go along for the ride, right? She must have been a little some tough conversations, I imagine. Okay, very cool. So maybe then it's good to kind of go into a bit more of the details. So what is it about Sovana's kind of solution that really helps to overcome these challenges that you experienced?
Yeah, absolutely. So just super high level, Sovana enables property owners who are sitting on equity to make an investment in Bitcoin in a way that requires no money upfront and no monthly payments. And so the way we do that is, it's actually easiest to run through an example. The way we do that is based on how much equity our customer has in their property, we'll qualify them for some investment size. Super quick, we take 70% of the value of the property and subtract from that any debt you owe. Mm. Any mortgage balance. And what's left over is how much we will fund. So if you have no mortgage on your property, we will fund 70% of the value. Mm-hmm. If you have mortgage balance, we'll take 70% and deduct that mortgage balance. Mm-hmm. And that's the maximum investment size you'll qualify for. Mm-hmm. So let's say, just for an example, let's say someone qualifies for $100,000 of an investment. So the first step is we, Sovana, using our capital. It's from the customer's perspective, it's our capital. We'll get into where we get that capital from later, sort of under the hood. Okay. Sovana, using our capital, we buy $100,000 worth of Bitcoin. We buy the Bitcoin ETF or one of the ETFs, and we store it at a well-established custodian. So we buy IBIT, we store it at Schwab. And we store it in a dedicated, segregated account for that one deal, for that one property, separate from all our other deals. And we don't fiddle with it, borrow against it, no trading in that account. It just sits there.
Yes.
The property owner has up to 5 years to exit the deal. And at any time they want to exit the deal, we sell the Bitcoin that was worth $100,000 at the start. If the Bitcoin's up when we sell, they get half the profit.
Okay.
If the Bitcoin's down when they sell, they have to pay us the loss, the shortfall. So if let's say in our example, the customer waits the whole 5 years. At the end of 5 years, we would take a look at the investment. It started at 100. If it's let's say 150, we would write a check for 25K, that's half the profit, to the customer. Yeah. But let's say at the end of 5 years, it's at 80K. The customer would have to write us a check for 20K, that shortfall. Now keep in mind, Ted, that the 20K loss in that downside scenario is no worse than if the customer had just bought Bitcoin themselves with 100K of cash.
Yes.
Right? They'd still be out. It's just that if it goes up, then they only get half of the profit. And the reason for that is they didn't put any money in. Yeah. Right? They didn't put any money into the deal.
But so how is the real estate itself? I mean, how is it acting as a security? I mean, what's the mechanism there, in a sense?
It's a great question, because the way I described it, you could make this deal with anybody.
Bit, right? You just need
but your buddy at the bar could be like, hey, I'll make a deal with you, right? I'll buy Bitcoin. You get to decide when we sell. If it's up, you get half the profit. If it's down, you make me whole.
Exactly.
Yeah. So the only reason we require property equity is to secure that downside protection. So in the case where Bitcoin's down, when you exit the deal, whether that's 5 years later or any time before, we need to ensure that the downside that you promised us, you'll make good on.
Okay. So in case they don't have the liquidity to make the payment.
If they don't have the 20K, the property equity should be sufficient for them to borrow
against
using
their home.
Traditional, exactly.
They get a home equity line of credit against their equity in the property, and they use
exactly.
Okay.
Exactly. Right. Or they may have savings as well.
Yeah,
like
it doesn't have to come from it. Yeah.
Right. This essentially, if you, and so yeah, we place a lien on the property at the time of origination. And all that's doing is securing the downside, right? It's basically ensuring that our customer is able to pay if the position is down at settlement.
Got it. So then I guess the obvious question would be, and I'm sure you get this a million times, right? What's preventing that customer from just going and getting a line of credit against their equity, and then they get the full upside?
Yes.
And not having to split the upside.
Yeah. And just broadly, there's a bunch of ways you could tap into your property equity to buy Bitcoin. And I think all ways are great. I think any path to Bitcoin, you can probably tell by now, any path to Bitcoin for me is a good path to Bitcoin. I'm happy that you're just buying Bitcoin. Be careful with leverage, but most paths to Bitcoin are good. And so, there's different ways that are going to be right for different people. The question you asked is the second question on our FAQ. Why wouldn't I just take a loan against my property? Like, why wouldn't I do what your co-founder did?
Yeah.
And the answer is you might. Like, if you can afford the monthly payment for the amount of equity that you want to tap into, then yes, you would take that loan and keep 100% of the upside. Now, you would have a monthly interest payment. I can tell you all about that. And maybe some stress around making a payment on a position that you're very down on. With Sovana, you get 5 years.
Yeah.
Right. If Bitcoin gets cut in half the day after you buy it, which we all know is the story of Bitcoin, like I said earlier, don't worry about it. You have no monthly payment. Don't worry about it. Wait it out. Let Bitcoin do its thing.
Yes.
What you do have to have, and this is our first question in the FAQ, what you do have to have is conviction that Bitcoin will be up at some point during the next 5 years. Mm-hmm. Now, keep in mind that it doesn't have to be up exactly 5 years after you originate a position with us. It just has to be up at some point during the next 5 years, because you can exit at any time. As a customer, let's say you buy, you get one of these positions. By the way, we call them BIPs to be cute, but also because it sounds like it stands for Bitcoin Investment Partnership. So if you originate a BIP and Bitcoin shoots through the roof a month, a year later, give me a phone call. I mean, we'll do it through our app or the website. We can end your position and I'll write you a check. So you don't have to wait the whole 5 years. We just want to give you that runway, because as Bitcoiners, we know that I think now it's more than 4 years that there's never been someone who lost money. I think it's closer to 5 years now. We want to give a sufficient runway to ensure that our customers can withstand the ups and downs.
Yeah, I think 5 years gives enough safety cushion. I mean, historically, when I've looked at the data, I think there's a few instances of days where if you really were unlucky and chose one specific date, you could be down.
Is it no longer? The last time I checked, which is pretty recently, unless I made a mistake, which is very possible, it was still 5 years. It was still it's no longer 4 years, but I believe that...
It might be the case if you really want to ensure that there's no instances where it's been no down periods on a 4 year interval. You're probably right. You need to extend it. I think what I've done is looked at the 4 years, and there's been very, very few instances where in 4 years it's that you'd be down. But regardless, I think that's that first question of having the conviction, I think is an important one, right? I think education, making sure you don't have people that freak out when it's as you said, it's cut in half within the first few months of origination. Those can be difficult conversations, I think, right? But then,
actually, on your point there, sorry, real quick, on your point there of the time duration, I also think it matters what phase of Bitcoin, what in the Bitcoin cycle we're in at the moment. For example, right now, I would have very high conviction that Bitcoin is going to be up in the next 5 years. Very high conviction. Probably in the next 2 years, maybe even the next 1 year. And with that, we're exploring variable share of that upside split. So our default, and if you go to our website today, it's 50-50. The customer gets half of the profit, we keep half of the profit. But we're exploring, hey, if Bitcoin looks super, super attractive, like it's looking right now, then maybe the shift the balance is more in favor of the capital, right? Maybe sometimes it's more in favor of the customer. So I think it's sort of like a toll bridge or Uber surge pricing. I think there might be some dynamism in the upside share.
Yes. I think that's a nice thing, an additional toggle to kind of look at, right? Because I think that could entice different customers if there was some variability in that. I was also going to mention, I think it's quite clear as you brought up the not having to pay an interest payment regularly. I think that's also certainly a nice feature to have versus going and getting a loan where people, as you said, they don't have to feel this regular onus of a payment to make, right? And then if I really do, I still have conviction to keep on paying this current payment, whereas I think
exactly
you can have more peace of mind if you're just like, all right, I made this deal, I won't look at it for 5 years maybe, or we'll look at it every year and make a decision then, instead of having that kind of constant prod to say, is this something I still want to be paying every month?
Exactly.
Very cool.
Also, one other note on the duration, on the 5-year duration. We are prioritizing and focusing on investment properties. And the reason for that, Ted, is if you do this against your primary residence where you sleep at night, you have to be very careful. You always have to be very careful when you're involving your primary residence, where you and your family go to bed, in any sort of investment. It's not that you can't do it. It's sort of like I was saying earlier, leverage. There's responsible ways to use leverage. You can also get in a lot of trouble using leverage. And so for that reason, we want to eventually do primary residences, but we're starting with investment properties because it's all well and good to have 5 years for the term. But if you get a new job or you lose your job, or for whatever other reason you have to sell your property, we require that the deal end. And so if you're doing this with a primary residence, again, it's possible and we want to get there, but you have to do it with a lot of thought and a lot of care. And so that's why we are doing investment properties. These are rentals. These are secondary vacation home type properties.
Yeah. No, I think it's a prudent way to certainly, you don't want to have, as you're starting the business out, any cases where people feel like they've gotten burned because they've done something they maybe shouldn't have based on the risk profile and so forth, or things they couldn't have foreseen. And when it's a secondary residence, it's not going to necessarily be something that is too detrimental to one's life. And I think these people will tend to, it's usually a sign if you have a second or third property that you have the wherewithal to withstand certain amounts of economic shocks as well, right?
Right. And on that note, we're actually, exactly. On that note, we're actually prioritizing accredited investors as well.
Okay.
To begin.
Cool. So maybe it's worth thinking about like a little bit, where is Sovana in the kind of stage of maturity? How have you started deploying some of these contracts? And if so, how many?
So we're pretty new. We announced at the Bitcoin conference in Vegas last year. And since then, we've had a very robust pipeline of demand. We've been very, very happy to see customers signing up for the product. And where we are now is working on the other side, on the capital side. So right now we're working with capital partners to build up a reserve of dollars to deploy into these positions. We haven't yet started doing that. We're still on our wait list technically, but we're planning on doing that very soon.
Okay, so it's kind of open to investors who want this type of exposure. It's not like you have so just a feeling, is it going to be like kind of an open fund, this kind of structure, or is it each one is sort of a segregated financing?
So different capital partners are deciding to work with us in different ways, and we're open to all sorts of ways of bringing capital in. So the fund structure works. We do have a fund. We'll also do private placements, really any way because this is a novel concept, right? Everyone we've talked to is like, oh, this is super novel, super interesting. And even though you and I are very familiar with Bitcoin, it really is in many ways a novel asset, particularly for TradFi. So, by the way, that's part of the reason we went for the IBIT ETF, because while our public customers are property owners who are already thoroughly orange pilled and very comfortable with physical Bitcoin, hardware wallets, multi-sig, private keys. Our capital partners aren't, right? They're newer to Bitcoin. This might be their first entry into Bitcoin. In fact, that was entirely one half. The other half of the inspiration for Sovana, we talked about the inspiration on the real estate side. The other half of the inspiration for Sovana was my learning over 14 years of trying to evangelize Bitcoin, that even though I may convince or close to convince someone that Bitcoin has a good shot at becoming the next gold, even if I can sort of make them get there somewhat, there's still a lot of apprehension. There's still a lot of nervousness of it going to zero. What if it's the MySpace, right? Not to deride those objections. Those are real and worthwhile objections to engage with. But I definitely sensed half of their mind going, Sanjay's a decently smart guy. What he's saying, makes sense. I get it. I totally see this could happen. I buy it, but what if it goes to zero? What if the government kills
There's
it?
enough to not take that actual action, right? There's
exactly.
The there's enough for everything, but there's something else that needs to be done to actually go and hit the button.
Exactly. Yeah. In fact, it's the only asset that sophisticated investors, smart investors can at once believe this thing can go to $10 million a coin and it can go to zero a coin. I think there's really no other asset class. You might say that about a
venture capital
individual startup, an individual startup, right? Yeah. One startup, you might say, hey, it could become the next Google or it could go to zero. But there's no $1 $2 trillion asset class
not at that scale. Yes.
That you can say that about.
Yeah.
Right. Which is why Sovana, I think, is so powerful. What we're doing is we're bringing together what I think of as conviction without capital. That's the property owner side. They have deep conviction, but they don't have capital, right? At least not liquid.
Not liquid. Yeah.
And on the other side, you have capital without conviction.
Right. Yes.
And each of those is being prevented from jumping into Bitcoin because of what they lack. This side lacks the capital, this side lacks the conviction. And so if you bring them together, you unlock more capital into Bitcoin. You unlock more ownership of Bitcoin, and you advance Bitcoin's progress to becoming a store of value.
Yeah, no, I think it's a really elegant way of articulating what your proposition is there in a way, right? This capital without conviction, conviction without capital, bring together, and then the real estate acts this way to kind of secure the downside,
exactly,
right? To make sure that they can trust one another in a way that that makes sense. Yeah.
Exactly. Yeah. In some ways, Sovana is everything to do with real estate, and in some ways, it's nothing to do with real estate, depending on how you look at it.
So ultimately, part of what Sovana's kind of mission is to have more people owning more Bitcoin, right? Yes. So at the time that the contract is closed, everything is kind of obviously denominated back into dollars, I suppose, right? Whether it's up or down versus the US dollar. But then do you provide the opportunity for the different counterparties to get their money back denominated in Bitcoin?
Absolutely. Right. What good is it if you just give them dirty fiat at the end of it?
That's what they want to do with it, right? But yeah.
Right. And fiat's great for transacting. But yes, I mean, the answer to your question is yes, we want to do that. A lot of what Sovana is today is really just a crawl before you walk, before you run. We want to eventually have physical Bitcoin that we're holding, not IBIT, right? We want to eventually and prudently allow our customers to borrow against the Bitcoin. We want to eventually, I actually think this is really cool. Imagine if every month you got paid for taking on a Sovana position. And it's super easy. All we do is we allow our customer every month to sell a call option. Let's say 20% out of the money, call option. And either the call gets assigned and the customer has to sell the Bitcoin, which they're allowed to do, right? The customer is allowed to exit at any time. And if it doesn't jump up 20% in a given month, they get a check every month. And you can set it to wherever you want, set it to 30%, set it to whatever you want, where you don't think it's going to hit in any given month. And if it does, you're happy anyway. So there's all to say there's a lot we want to do and build on top of once we get this base layer of Bitcoin in people's hands. And so giving physical Bitcoin is absolutely one of them. And this isn't something we've spent a lot of time on right now, because this is a concern for, once the positions are up and we've got a bunch of happy customers sitting on top of a lot of nice Bitcoin appreciation. So we haven't thought about it a ton right now, but it's something we definitely want to do.
Yeah, it's cool. I think new opportunities can be created, right? New additional optionality for the customers. And especially, I guess you would have some benefit of, if you have some larger positions, you should be able to get better rates, and whether it be trading fees or better premiums on the derivatives and so forth. So there's certainly a benefit of scale as well. Really cool. As we're reaching kind of towards the end of this, I'd like to kind of turn the lens towards corporations a little bit. And I guess it's a bit of a spectrum, right? If you're a guy that has one rental property, maybe you have 3 or 4 rental properties, they're in a small business around real estate ownership. And then maybe, you have holding companies where maybe one of their divisions is real estate because they're just kind of storing excess profits in that asset class, right up to maybe real estate companies that's their primary business and they have a large portfolio of real estate. So how do you think about that kind of spectrum? And are you thinking about targeting some of these real estate focused businesses or companies that have real estate portfolios?
Absolutely. They would be squarely in our target, actually. And we've had a number of commercial resident, we only work with at the moment residential real estate, but we've had a number of commercial groups with apartment buildings, apartment complexes approach us saying, hey, we'd like to do this on, this 100-unit apartment building. I think what attracts them is their ability to tap into their equity to invest in Bitcoin without impacting their cash flows, which is really hard to do otherwise. There's really no other, without impacting their cash flows and without giving up any of their upside in the property, their equity in the property.
Yes, they're not not diluting themselves in any way.
Correct.
Very cool. And also, just I guess for now, I imagine you're only eligible for U.S. citizens and properties
right now. That's another walk before you run. Nothing about our structure prevents us, and we really want to expand globally. But at the moment, we're focusing on the U.S.
Got it. And so there's no real restrictions. You can operate in all 50 states. Is there any sort of specific licenses or regulatory requirements you need to be able to service different?
Given that we're going to prioritize investment properties, there are very few such restrictions. We're not a lender. Our structure is such that we form a joint venture with the customer. So it's a joint venture where the customer contributes a lien on real estate, let's say $100K lien, and Sovana contributes $100K capital into that joint venture. The operating agreement for the joint venture is super simple. Right. All that happens is the 100K immediately buys, after paying some closing costs. We have to appraise the property. We have to get title insurance on the property. But essentially, the 100K buys the Bitcoin. There's no decisions to be made during. We may layer on top later that fund call option thing. But right now, there's no decisions, no investment decisions to be made at all.
Yeah. So pretty clean contract.
Exactly. The customer is the only one who decides when we end, except if 5 years have passed. If 5 years have passed, if there's
change
refinance. Exactly. There's certain, one thing I really strive to do on our website is be as clear and as transparent as possible. I strive to even have you understand the product without scrolling down. Just the front page above the fold, as they used to say, should tell you about everything you need to know about the product. One of my pet peeves is I'll go to websites, and they'll have some offer, and I have to like try to figure out, okay, exactly what's going on here. What are the terms? What are the parameters?
A lot of
But
fine
I
print,
really want
a lot of things in the
yeah, fine print.
Annex 3.
There's always going to be fine print, but like, can I get across 95%, 99% of the basic idea here? What's going on? Right.
Yeah. No, I think you've articulated it very, very well. It sounds very, as I said, relatively elegant, but also quite novel in the space, as far as I can tell, at least in my kind of rudimentary research. And I think, again, this kind of way of talking about marrying, conviction without capital and capital without conviction, bringing it together, I think it really, I believe there's a strong case to be made for it. So I'm glad to hear that it's kind of taking off and growing. I look forward to it being available in Canada and Europe in the future. Any final kind of closing words to the audience before we wrap up?
No, just wanted to say thank you. This has been super fun. And let me know next time you're in Florida.
Yeah. And if you're over here in Northern Europe, be happy to kind of host you here as well in Denmark. So fantastic to get to know you, Sanjay. Looking forward to covering you in the future and following Sovana's growth going forward. And so thanks again, Sanjay. Great to meet you.
Thank you.
All the best in the future.
Thank you so much.
Take care.